our subject today is doing a deep dive into fully underwritten and simplified issue. And I'm just going to educate you guys a little bit about what's the difference in the two, and when do I go fully underwritten, and when do I do a simplified issue. Kind of tell you the way I was taught. You almost always want to try to do a simplified issue if possible. If you're not sure about, so what you want to do, if you're not sure about their health, let's talk about this for a second. Let's say they hadn't been to a doctor in quite some time. You get this a lot with with obviously with whole life or final expense. Rarely do you ever do a fully underwritten on a whole life. Now you can with participating whole life. That's a little bit different, but those are talking more on debt-free retirement and building big policies. But on final expense, you're almost always going to do a simplified issue. Matter of fact, that's about probably 95% of our carriers. That's what they do. So what do we talk about when we talk about simplified issue and fully underwritten? Normally, we're talking about term policies, right? So a term policy. Now, I had a client, and I hope he's on here. Is Kai on here? Kai, is he on here today?
I don't see him.
JP, if you're on, if not, one of you guys that has Kai, you need to reach out. He needs to be on here, but this has been recorded. I'm making sure he hears it. So Kai had a situation come up this week, and this was one of the reasons. I had another one, I think, yesterday that asking about the same thing, about fully underwritten. And I thought, we probably need to teach on this. So he was doing a policy review, or the guy called him up from a lead, and he called the guy up from a lead, and the guy said, well, I've got a Americo policy, and I'm paying like $380 a month, or whatever. It was an expensive policy for, I think it was $75,000 maybe. And so Kai's doing his shopping around, and he pulled up a quote through Kansas City Life, because that's one of his carriers has. And I love Kansas City Life. I think we ought to be writing a lot more of them, to be honest with you. So Kai runs up a quote through Kansas City Life, and he types it up. And it was a fully underwritten. So remember, Kansas City Life had one, when you go to their website, it'll tell you simplified issue or fully underwritten. And he didn't pay attention to the non-simplified issue. I think it's a non-simplified issue. And he just typed it up and thought he could type up the whole application, didn't know, hadn't done one of those before. So the guy, when he hangs up, the guy calls Americo and cancels his Americo policy. Now, we're educating you guys today on what to and what not to do. He canceled the Americo policy, and then he gets an email saying that or a phone call from Kansas City Life saying, we're going to set up your blood work. When can we come in? And he calls, and he was mad as a whistle, boy. And he was upset with Kai. He said, what's this about blood work? You never said nothing about blood work. And Kai was kind of set back a little bit. He didn't realize it was a fully underwritten, didn't know really much what fully underwritten were. New agents. And so I thought, boy, it's time we teach on that. And that was kind of a mess, because we had to figure out how to get that policy back in place with Americo. Now, a lot of times when you cancel a policy, you call in and cancel it, they won't let you get that policy back for 6 months, and you got to reapply. And that's what they had told him. He was upset. I just lost my policy, and I've got to go through. I don't want to do blood work, and it was an issue. So I was able to get on the phone with Americo, talk to the right people, and we were able to go through and get that put back in place. So here's what I'm going to tell you. If somebody is doing shopping and they've already got a policy, and you can do a fully underwritten. Now, why did he go fully underwritten? Because he saved him a lot of money. He was getting $100,000 for about, I think on this one, it was about $280. So he was saving about $100 a month. But that's only if they go through the blood work, the urine, tests that they do, all the stuff they do on that. They go through the doctor's reports. They do a deep dive into a fully underwritten, and they check everything out, and then they rate you. and then they come back and they give you a score, and they say, we will offer you insurance at this price. That's the way fully underwritten works. But it can take a month. I've seen it take 2 weeks, but it can take them 2 weeks, a month. I've had them take 3 months, literally waiting for doctor reports to get there. Never cancel the current policy. Okay. So if you have an Americo, a Mutual of Omaha, a John Hancock, I don't care. If you have a policy in place and you're trying to do a fully underwritten to beat the policy's price, do not cancel the current policy ever, because you could jeopardize that person. What if they come back, and this happens, guys, I promise you, fully underwritten is scary. In my opinion, it's a scary way to go. And you can hurt your clients if you're not careful. Let's say they do the blood work and all of a sudden they show something up in that blood work and it happened to me about 6 months ago. I had a guy named Clark out of South Carolina, and we did the blood work. He was healthy. He said, good doctor reports. They did the blood work and they found elevated levels in his liver enzymes, whatever. And he got denied insurance because of it. Now, having said that, had I went and got him a simplified issue first, he would have got insurance, right? And then once I get the simplified issue first, I'll say, here's what we're going to do, Clark. We're going to get you this one first, because once you get denied with a fully underwritten, it's in the MIB. Y'all get that, right? It goes to the MIB and you said, I was denied with insurance. It makes it difficult to get insurance again. So my suggestion would be this. We can shop for them, but if they got a simplified issue first, keep it. Let me go ahead and submit the fully underwritten, save you some money, knowing it could be a month or 2 months before we find out what you're going to get. But once you get it, you'll have that client forever. The fully underwritten are good because the pricing is good. It would be my recommendation anytime going forward we do a fully underwritten is that they go ahead and let you do a simplified issue prior to, if there's any doubt in your mind. Now, if they recently just went to a doctor and they got really good doctor reports and it's current, that's a different story. Go fully underwritten, you're fine. But for these people that hadn't been to a doctor in a long time, you never know what's going to show up in that blood report. And so I'm just telling you from stuff I've learned, be careful on those. So fully underwritten. When do we write one? When do we not write one? Just be careful with them. I'm not opposed to them. Now, let me tell you another story I did. And I shared this on a new agent training about 3 weeks ago. Misha was on there with me. Sometimes you need to do a fully underwritten. And whenever a client maybe gets denied and they cannot get a simplified issue. When can someone not get a simplified issue? Obviously, here's how a simplified issue works. The insurance carrier they kind of check the boxes, right? They don't do a deep dive. They don't call the client and say, what is this or what is that? Basically, did you have cancer, heart attack, stroke? Do you have kidney disease? Do you have liver disease? Do you have any of these, COPD, whatever it might be? You check the boxes, right? And if you put yes on one of these boxes, and they look at your MIB and they see the prescription history, then everything is kind of done off that MIB and the boxes you check. Simplified issue. Make it easy. You can usually get coverage day one immediately, right, on a simplified issue. We like that, but what happens is just because you're checking boxes, many times you'll get somebody denied with a simplified issue term product or even on whole life. You get denied because they check a few boxes that the insurance carrier said, I'm not going to take a chance on them. Next, right? That's what happens. So I had a lady, we were trying to get her a term policy, and she got denied twice. And it's because she had a stroke, and term carriers on a simplified issue don't like strokes. They just say, if you had a stroke, you have to go whole life. You can't get a term. But she had a stroke about 3 years earlier. So I asked her to give me the details of the stroke. And she said, well, Darren, it wasn't really because I was sick. She said, I was riding my horse. And it's Oklahoma, a bunch of cowgirls out here. I was riding my horse. I got thrown from my horse. And while I was healing, I had a blood clot come up in my lung, and it caused me to have a stroke. And went to the doctor, and they treated me, and I was fine. And so I called National Life, and I said, what would that look like? Could we? And they said, submit it, and we will turn it in. We'll do a deep dive into it, and we will assign her an underwriter, and we'll actually call the doctors and get a doctor's report, or ask for doctor's reports, and they'll look into it. Well, she was denied twice by simplified issue. I wasn't going to get her a term policy. So I did a fully underwritten. Guess what? She got standard. They won a standard, all terms they won. She got standard rating with a stroke a few years ago because they said, we'll take her. So there's an example. Sometimes when you get a client that is getting denied for a simplified issue, don't just throw it away and say, well, crap, we can't get you anything. Sometimes a fully underwritten is the way to go. I'll give you another example. Had a truck driver out of Missouri, and he wanted $500,000 of insurance. And he owned about 2 or 3 trucks, and he knew what his, if something happens to me. Well, he had been to the doctor lately. He was a type 2 diabetic. His insulin A1C was around a 10.01. Like, it was high, right? You want that in that 6 range, 6.5. Anything below a 7 should be okay. He was running in the 10s, and he got denied. And actually, it was Trisha that was trying to write him. She got denied by 4 different carriers trying to get him a term company, and she couldn't get him. She said, try, Darren, do what you can. He needs it. So I tried it, and I went with one and got denied. Couldn't get a term policy. So I did the same thing. I called National Life. I said, look, he's this is what he has going on. I'm like, he just wants something. They said, well, submit it. It can't hurt, right? Submit it. And so we submitted the policy, and they came back, and I'm talking to the underwriter. He said, Darren, I can't believe. He said they actually approved him with that high A1C. I've never seen it happen. But he said sometimes they'll sneak through, and they'll let you get approval. And they approved him. Now, it wasn't a standard. It wasn't even a substandard. It was the lowest, the rating that they can give you. So it was like level 8 or whatever they call it, but like the lowest rating. But guess what? He got his insurance. And I think we dropped it 500,000, 300,000. He was okay with that. He got 300,000. I think he's paying 500 or something a month. It wasn't cheap, but he didn't care. Like, he's a truck driver making a lot of money and own a business. He was so happy. I still have him as a client today. And that's been a couple of years ago. I couldn't have done that if I didn't go fully underwritten. He was uninsurable. But sometimes fully underwritten is the way to go. So the reason I tell you this is never to give up on any case. Sometimes you'll need to go fully underwritten. Now, sometimes you want to go simplified issue. This guy the other day didn't want no part that Kia was working, Kai was working. He didn't want no part of blood work. And so and he was kind of cussing Kai out. So I called him up and kind of put him in his place. And I said, like, dude, we don't treat people that way. And I said, I'm telling you how it was. And I explained to him. I said, why are you so afraid of blood work? He said, well, I just don't like it. I said, like, you understand, like, the insurance company, you're talking about $100,000 here. And you want cheap, so you got cheap insurance and you got, more expensive insurance. If you want the cheap insurance, let them come out there and draw a little bit of blood. He said, well, I don't want to do a physical. I said, who ever said anything about a physical? He said, well, that's what I thought you had to do. I said, you want to do a physical. They're going to draw blood, make you pee in a cup, and they're going to put something on your arm to do blood pressure. And then they're going to ask you some questions. This is that simple. And here's what I explained this to him. I said, another thing is the insurance company is going to spend about $500 on that guy to come out and see you. And he said, well, they are. I said, you don't have to spend a dime. The insurance company is willing to do that. Now, how does that work? Let me explain to you guys this. The insurance company will pay. You think those paramedics are going to come out there to your house and do that for free? They're not cheap, guys. They're going to come out. They're taking time. They're going to come out to your house, and they're going to, and then they send up blood work and stuff to a lab outside of them. They send it to another lab who does the blood work. You think that's free? That insurance company, every time you do a fully underwritten, they are spending money. And usually it's upward $400 to $500 per case that they're spending trying to get that. But why do they do that? Because once they get you and they say this is a good client, they will have you for life because you're not going anywhere. If you went through all that trouble, you're getting the best rates, you'll have them for life. So fully underwritten can be good. I've always heard of other IMOs. The other one I came from never write fully underwritten. Matter of fact, every IMO I've ever been a part of has said never do fully underwritten. They'll preach that. Don't do it. I'm going to tell you the truth. Sometimes you need to do it. Sometimes you want to stay away from it. It's just you got to know every case is going to be different, okay? But don't be afraid of a fully underwritten. You're going to save them typically some money. But if you're doing that, also don't be afraid to write them a simplified issue first. If they tell me they have not been to a doctor, if they tell me they haven't been to a doctor in several years, 4 or 5, some will tell you 15 or 20 years. Like they're going to tell you that. I don't go to the doctor. If they tell me that, here's what I'm going to say. Joe, I appreciate that. Thank you for being honest. I'm going to be honest with you. There's no telling what's in your blood work right now. So let's do this. We're going to get you simplified issue, day one coverage right now. Before I hang up the phone, I'm going to get you a policy in place. Okay, we're going to use a company called Americo or whoever you want to go with. You're going to go with simplified issue. Now, having said that, once we get that in place, why don't we go ahead and see if we can't get you some a little bit cheaper insurance, and we can get you a lot more coverage for that same price, right? So if you're spending 200, I can get you, $1 million instead of 400,000. So, but let's do the first thing first, and you get them something. I don't know anyone. I never heard anybody say that before. Other companies. Scott, you've been around a little bit. Have you heard anybody preach that concept?
I've done it, but I haven't heard it preached. No.
Yeah, they don't. They tell you stay away from fully underwritten. Misha, you're on here. Misha's been doing this a long time. You remember Albert and those guys? They'd say don't do fully underwritten, didn't they?
They did, because one, it takes a very long time, but you only do it when you must.
That's right. And so now, if you do, I will warn you, if you do a simplified issue and you get them a coverage in place, don't cash that check yet. Let it sit in the bank because you might have to turn that back in. So just do that on occasion. Normally, I would do the fully underwritten if I felt like they had some good doctor reports. But if they hadn't been to a doctor in a long time, I just know this has happened to me so many times that you get reports back and they say, well, we need and this is what Misha's talking about. Though a lot of times they'll come back and they'll say, we need a doctor's report from back in 2018 when you had that heart issue and you went to this specialist. Well, now who gets that? We've got to find that. Go to that heart specialist, send them a form, and then you got to wait for them. Now, how many know that doctors and their offices can sometimes get those forms and put it to the side? It's not priority to them, is it? And that I've seen that thing sit there for weeks and weeks and months, and finally the client, guess what they do? They're like, Darren, don't worry about it. I'll just go move on. I'll do something different. And so that will happen. So fully underwritten can be a nuisance. It can be, I would not push it, but there are times when the scenario that I gave you today, when you will try it. Okay. And so what is fully underwritten? Where do we find those if I wanted to do that? I'm going to show you real quick. See if I can share my screen. Okay. Let me see if I do it off this one. Hopefully it'll let me pull up. Can you guys see my screen?
Yes, sir.
Okay. So look here. This is in your B2B. We call it the Navigator combined, but you notice at the top b2b-hq.quility.com. This is their Navigator. This is where I go. If I want to do it fully underwritten, I'm going to go right here. Okay. for the most part. They don't have all of our carriers here. We don't have National Life in there, but they got some really good ones. So I don't mind doing. Okay. And then here we're going to put in the quotes, and we'll just to put age of let's go 45. State, we say Alabama, male. We're going to go term. Select term length. Misha, when we're doing this, why don't you run me, or Leanne, why don't one of y'all run me a 45-year-old male? Anybody can do this for me. A 45-year-old male, non-smoker, and let's do 200,000. And let's just do it on a simplified issue. I want you guys to give me a simplified issue rate, and we're going to kind of compare, okay? So let's do that. 200,000, just start. And let's do let's go and do a 30-year term. Okay. Do 200,000. Inner health class. And I like to just do standard ratings here. So I don't quote these other ones, even though they tell me I'm preferred and all that. We'll let the insurance carrier decide if they are. I simply say, well, we're going to look at a standard rating and just know they very likely can be better than that, but it's probably not going to be worse than that. Okay, this is annual, so we're going to drop this down to it takes you all the way to 75 years old, and we're going to go monthly. Okay, now look at these carriers: Principal, Banner, Pacific Life, Foresters. We have these carriers now. A lot of these are Pacific Life. It's a just-in-time application, right? So on that one, you would write the application. You go to apply, write it, and then while they're checking out the underwriting, they're going to get and contract you. So you guys all have access to get contracted with these Foresters. But let me go down to my favorite, and I'm going to tell you why. North American. So it's going to be a little bit higher, 86.50, than some of these other ones. Not a whole bunch, but it is a little bit. But I'm going to tell you why. I like North American here on these fully underwritten ones because they have the best living benefits of any of them. Some of these, like Pacific, doesn't even have living benefits with it. North American is going to have all three of the major living benefits riders that you can pull up to 70%, maybe it's 80 even, right off the bat. So they got really good living benefits. So the way I do this one, I'll say, okay, so look for just $86 a month, you can get that 200,000 that you're looking for. But this is not just life insurance, it's living insurance. What that means is if you have a heart attack, stroke, cancer, any chronic or critical illness that fits in that criteria, they're going to actually let you pull about 80% of that policy out if you need to use it right off day one. Okay, so that's important to have that. And that's a company called North American. I would rather pay just a few more dollars to have that living insurance, wouldn't you? And then I always say this. Do you know anybody that's had cancer, heart attack, stroke, while they're younger, trying to pay off their house or whatever? Yep. Okay. Well, same here. Well, we're going to make sure we take care of that today so you get this living and life insurance for both. Okay. And then you just go there to apply and to start e-app. This is real simple. It's going to take you straight to the site and you just fill it in, and the application process is that simple. It doesn't take, they don't even ask health questions on here because why? They do that when they come out for the blood work. So it's really a very short application. Not much. Okay, Misha, what did we find out on or Leanne, did we find out anything on pricing on a simplified issue 200,000?
So I did mine through Instabrain. That's simplified issue, right?
Yeah. Now I'm gonna give a little Instabrain and Ladder are almost fully underwritten, but they do it a little different. But they do a deep dive. So sometimes Instabrain and Ladder is actually going to give you a better rate. So I'm not afraid to use those on simplified issue if they're healthy. What did you get
Okay.
on? I'm just curious what they gave you.
$70.21.
Oh my gosh. So even better. So now the problem, what do we know? Anyone that's done InstaBrain, there's a lot of declines on it, right? Because they do a deep dive into it where once again, if we were doing a fully underwritten through one of those North American or something, you're going to get them coverage. You will get some declines with InstaBrain. I think they said last time I heard, I thought it was around 60% approval, meaning 4 out of 10 is going to be declines. Ladder, same way. Ladder is going to be about as cheap as them. But if you run into somebody, I think it was Scott asking me this morning, and Scott, those are the two names I'd say you wasn't it, Ladder and Instabrain. Why?
Right.
I did that because they're cheaper, right? They're basically a fully underwritten with a simplified issue process. What does that mean? They go a deep dive into everything without calling and getting doctor reports on that. They're going to look into it very closely. And they're going to ask more questions than some of the others, and they're just doing a deeper dive into it. But it's a good one to have. So good. Did anybody else run one maybe through America or something? Nope. Well, I'm going to do one then. Let me see if I can. Let me see if I can do it in America, just so you guys see the difference. I want you to see the difference in America or a Mutual of Omaha or.
With America, the monthly contribution is 142.
For 200,000, 142. Okay, thank you,
Yes.
Misha.
And
Okay,
with
that's what.
Mutual of Omaha, it's a crime. Mutual of Omaha actually is something 140.
So 140. So you can see the difference. So you got a company like Ladder or InstaBrain that will do a simplified issue, really cheaper than most fully underwritten. Then you got your fully underwritten carriers, and then if you went with a company like Americo or Mutual of Omaha, American Amicable, they're going to be higher just because they're going to give you that rating, which is worse than the standard rating. Now the difference is, Leanne, all of that quote you gave me with InstaBrain,
Mm-hmm.
there's a good chance if they get qualified with InstaBrain Fidelity, they're going to get a preferred rating with the other carriers, right? Because that's just reality is. They're going to get a preferred rating with that fully underwritten, and you will see that go down to probably more like $60 a month. And so you could do that. You could fill out with the fully underwritten and save us some money on those. But so long
But
story
this is
short,
this is
yeah,
one thing, if I may say something.
yeah, go ahead.
The advantage of using a simplified issue is that we can know if the client is going to qualify now.
Mm-hmm.
Yes, the rate is going to be higher because they're taking a higher risk to approve somebody on the spot. Whereas if you do a fully underwritten, they're going to look ways to decline the application. That is why they order the lab work and everything. They want to make sure the risk is so low. So if they find
Right.
something that doesn't match, they decline. So that is the downside, in my opinion, with the fully underwritten policies. But I mean, sometimes we have to do those.
Sometimes you have to.
Hey,
You're right.
Misha.
Their job is to actually find a way not to insure you. I mean, that's just reality. Because they don't want, if they find you got some issue, they're not going to offer you that 100,000, or $1 million worth of insurance, right? Because they said, nah, I don't want to take that chance. Their
Hey,
stakeholders
Darren, if I could say one thing from earlier, I heard you talking about the situation with Kyle. I was driving, but
yeah,
I am a big fan of calling insurance companies. I don't care if the person tell me they got this. I'm going to call the insurance company every time to do a policy review. And I always tell my clients, what you see on my hat, a stallion, I say, let's hear it from the horse's mouth. So I always call the insurance company. I trust nothing the clients say. That way that situation does not happen. But good thing that Darren stepped into that situation because that's lawsuit all day long.
yeah, you got to be careful. I had to really, I had to dig in. Like I'd spent about 2.5 hours working on that case, trying to get him his policy back in place. So be careful. We haven't done any training after I went through that ordeal this week. I said I've got to train on it. I've got to train my agents because I don't want you guys to get yourself in trouble If you got a question, reach out to your upline too. And that's another thing. He had two uplines, and he didn't reach out to either one of them. And I seen him post something on GroupMe, and that's when I reached out to him. I'm like, what's going on? And he told me, and so I had to do a deep dive into that issue and get that resolved. But guys, and this is on another tangent, but I think it's time that we talk about this stuff. If you're going to hire agents, be a leader, and you be responsible for your agents. I've got some agents that hire people and they're absent, and it's happened more than a few times. Those agents are lost. They don't know. So you don't have to be a leader. You don't have to hire a team, guys. You know that. You can make a good living just selling insurance, and that's great. But if you're going to be a leader and you say, I want to hire agents, then be a leader. Go out there and help your people, and don't expect them to figure it out on their own. And if your guys are getting in trouble, then you take some ownership there, because maybe I didn't do my job to explain that better, instead of passing it off to the CEO and telling him to figure it out for you. That's not my job, guys. I'll do it because I care about you. But who ultimately should have been on top of that one? His direct upline. Coaching to you right now in 101, guys. If you want to be a leader, be a leader. If you don't. That's okay. I'm okay with that. But don't go out and hire people if you're not willing to put in time. You got to realize that they are paying you an override. The carrier will pay you an override. Why do they pay you an override? For your efforts of training and teaching, right? That's why you get paid an override. How dare you get paid 10, 15% override on somebody and never talk to that person and expect somebody to help them? Really? Now, we'll do it because that's what we do here. But is that right? If it happens many times, you'll be hearing a phone call from me, and we're gonna take away that position. We'll move people in other places where they can get some help. So just understand.
Hey, Darren, I want to make sure.
Coaching today, okay? There's going to be times you're going to see more of this going on this next 6 months. People that put up numbers, but they're not producing. People that are saying, I've got to have a certain comp level, but they're not putting up the numbers to back it up. We're going to start holding your feet to the fire a little bit. Either you're going to produce or you're not going to produce. We need to find out where you're going to be. But if you don't talk a big game if you're not putting up the numbers, guys. So we're going to just kind of be watching a little bit closer than maybe we've ever done. We're going to help you. We're going to help you get there. We want everybody here to be as successful as possible. But it's going to take teamwork, guys, and we're going to do it together as a team. So just know we're excited about that. You're going to hear more about this stuff on Friday. We're going to lay out a plan for you guys. It's going to be real exciting stuff. Hopefully between now and Friday, I bring on about 10, 15 new agents on this call Friday, and we can start doing that on a regular basis. All right, guys, that's enough for this. I hope that training helped you. Are there any questions on this stuff, that anything we talked about, fully underwritten, simplified issue? Let's go to chats and let's see if you have any questions for me today.
Darren, I've got something I want to point out real quick while you're looking at the chat.
Yeah, Scott, go ahead.
Just to all of the agents that are on here, a good business practice is never, ever, ever have your prospect cancel a policy until the new one is issued.
That's right.
Never, ever, ever, ever. You should have, when you went through and took your license, your testing, just about every state out there, the Department of Insurance has, when you switch from one to another, you have to justify why you did. Right. And since you did not write that, don't ever tell them cancel it. Now, I'll go a step further because we do the right thing here. We don't just make the quick buck. Do you realize that how long does the carrier have to find fault with what you have done on your application for that prospect? How long do they have by state or federal law? Anyone?
2 years.
I'm sorry, say that again.
2
Is it
years?
15 days, Scott?
2 years.
You're right.
No.
2 years.
2 years. Now, hear me out on this a second. Let's say, for example, someone didn't give you the right information when you wrote something on a policy and it was submitted. All right, okay. I got paid. It's issued. All right, great. Go ahead and cancel the other one. Understand something. They're still not off the hook necessarily. There is still a 2-year period that insurance company, whether it was on purpose, whether it was accidental or whatever else. So we've got to be very, very, very careful. In fact, one of the things I tell people is if you want to let this thing go for a year or two and then cancel it, you just have more insurance during that period of time. But never, ever recommend canceling another policy. We're going to put a policy in place for them that's going to do what they want it to do. What they choose to do with the other one is up to them. I promise you, if you document that, if you say that, your errors and admissions and insurance will not take a hit. But it is just good practice for us. Never tell someone ever, ever, ever that you should replace this, certainly until the new one is funded. And then just because it's done, you're not out of the woods necessarily. So I just wanted to be a little bit cautious with that and make sure we understand.
Scott, I've been doing this for about 9 years now, and I've never canceled a policy in 9 years. And I've written who knows how much money or premiums over the years. I don't cancel it. What I do tell a client is it's up to you to do that. This policy makes more sense, but I will leave that up to you. You can call them and cancel it, and they say, "Well, do you have a number?" And I'll give a number, but I don't even recommend. I say that's up to you. I cannot tell you to cancel a policy. What I can tell you is that you currently have a new policy, and once you get approval on it, so simplified issue typically do get approval right off. I say you currently got a policy that goes in effect on the day you make that payment. It's up to you if you want to keep 2 policies, go for it. If you want to cancel one of them, that's up to you too. You own these, so you can do it that way. It's just the right way to do it, but never ever. Now I will say on Kia's behalf or Kai's behalf, he said he promised me, Darren, I didn't tell him to cancel it. He just chose to. I told him he had insurance, and he chose to. So I believe Kai that happened, but regardless, you got to be careful. So I appreciate Scott.
Yeah.
And not only that, another thing when we are replacing a policy, if we are going to replace a policy, let's not forget that the insurance company also does suitability on the new product. If we are going to replace, the policy that we're selling has to be much better than the one that they have. And the insurance company also asks you, what are you replacing? So let's say, a client has a term plan, a simple term that has no living benefits, and now you put him on another one that has living benefits, but now that's a much better product. So now the insurance company is going to say, okay, that one makes sense to replace. If it doesn't, if you're selling the same product, the insurance company also declines you. They said, okay, this one doesn't pass suitability. It's the same product.
Right.
What you want to do is go for your paycheck, and they decline it. So if we're going to replace, let's make sure that we replace with a policy that is much better. Higher death benefit, living benefits, an IUL, a whole life, something that is better than what they have. And again, don't go for the payment only, because what happened to me, I've seen in the field, some other agents, they tell clients to cancel the policies because I'm going to give you this higher death benefit, but it's only accidental. So let's just watch out. That's what I'm saying.
I would, Misha, that's fantastic. I would also make sure we understand we're professionals here, folks. So let's hit the objection before it becomes an objection. Let's let them know, listen, we're writing this up. Please do. Anyone who's been on the phone with me or Zoom call with me, writing people up, no, I will say this. Do not cancel your policy. Do not cancel it. In fact, I will go up and I will tell them that. So just as new agents, make sure we're getting the best type of practice and we're doing the right things. Just because, well, I didn't tell them to, okay, well, to go the other way and say, please do not. Please do not. So anyway, look, these are things that we've all learned the hard way, right?
No doubt.
And we're trying to pass them down to you guys. So,
Yep.
Hey, can I ask one of
Lisa-
you guys a question? I have a gentleman on the phone, 78, healthy. He has a $100,000 policy with AIG. He's paying $161. Can we help him out? 78 years young, term life. He does not want whole life.
Yeah. So let me run, Tommy. That's going to be one of those fully underwritten ones because
All right, so
years
he's
old.
healthy as a bull, Texas guy. He
Yeah.
said he doesn't care.
Well,
I'm on the phone.
y'all
with him
want to
now.
do it real quick? Let me do a quote on him real quick.
Let me get him back on the phone. Hey, yes, sir. Hey, Mr. Charles, I got my CEO on the line, Darren White. He's going to go over some options with you, but he can get you a term life. Are you okay with fully underwritten? Basically, what that means, they're going to do a urine test and just some blood. They'll pay for everything if you were to go through with this potentially.
I'm willing to go run a marathon right now.
You're willing to run a marathon. I love it, brother. Okay.
Let me run you a quote, Tommy. We'll do that real quick. While
Okay, I'm listening.
You're listening. Can you hear Darren? Darren, this is Charles.
Hey, Charles, how are you,
Lightfoot.
brother? Yeah. Okay, so I've got you 78-year-old male. What state are you in?
1 second here. Data, he's in Texas. So Darren,
Texas,
I only
okay.
talk to my people here in the red state, brother.
Okay.
Shoot that George Charles to go fly a kite. He's trying to turn us blue.
No, that's not going to happen. That's not going to happen at all. Texas will never be blue.
Get out of our country. Get out of my state.
100%, brother. Get the heck. Yeah, 100%.
100,000?
Thing going on. Go in there and get a bunch of tanks.
This is how we talk here in South Texas. No offense, baby.
Faces away. Tell Gavin Newsom, yeah, you want me to arrest you? I'll arrest you, dumbass, right now.
100%, brother. Get him out of here.
Okay, Tommy, what's he paying right now?
I'm here with that crap.
Hey, Mr. Charles, really quick, brother, because I want to help you out. All right. My CEO is asking how much you're paying right now. You said 161.
160, 150 for 100,000 American General. I've had it a few years. I'm with Edward Jones. I bought through Edward Jones, the financial group.
Scott, you might need to be on this one, brother.
I just had a guy quote me. I forgot the company. $133 a month. 10-year term. Well, that's the same. That's 89. I'm not getting anything. I just want something to go till I'm 99.
You want something to last till you're 99, and you said, go ahead, brother.
Yeah, but I know I'm not stupid. I know it's going to cost more, but I'm not going to pay $300, $400 a month for that kind of insurance. I'm sorry.
This is a close. Darren White, Scott McDonald.
I just know there's somewhere it's cheaper. Just to cover my family, my wife, I've got a good retirement set up, but I just want her to be comfortable. I mean, I'll live her. I don't know.
What do you want?
You
want to call me three-way really quick? I give you my number. You happen to call?
I've been through several phone calls. I'm not going to be upset.
He's talking. He got money retirement.
He's being quoted. I'll tell you what's going on here. He's being quoted a preferred rating without that. So
I got you on that. We're just looking right now, running some rates, and there are some other options too as well. I'm not too diverse in these options, but there's like a retirement. I know you're not. It's basically how they set these up. Not going to be any extra money out of your pocket, and we do have a retirement specialist that does explain how that works. I think a guy like you, being a Texan guy, you keep an open mind. We're both, this is the red state. We always keep an open mind. So that's available for you. And I can have him reach out. He can call right now and chit chat with you if he's available. What you got, Darren? I'm trying to hold him on.
Yeah, I don't know. Let me try one more thing.
It's not an investment program. No, sir. I would rather him explain it to you than I. It's not an annuity either. Like I said, I just deal with the basic life side. This guy right here is an expert. Has homes all over the place. Yeah, so he knows what he's talking about. What we got, Darren? Go ahead, Scott.
I was going to say, if you want me to talk to him, let's get him to schedule a call later on today, and I'll call him.
Okay, gotcha.
You got the number? Text me the number. I'll call him.
Okay.
I can discuss it with him, but if you come up with
Hey, I'm muting myself, Darren.
It's $75,000, but I'm not going to pay him $200 a month.
I just posted a quote on the chat.
Trying to. You did? I'm still struggling here trying to get it to go.
Yeah, I put it with Transamerica. That can give you 20 years.
What?
I think
just look at
Tommy's got us on mute here. The biggest problem that I see right here is that we're chasing price instead of understanding what is it he's wanting. And so I think until we understand that, we're just going to be trying to catch something through a strainer. And you know, that's what we have to understand. He's not going to get term coverage until he's 99, period. So what does he want it for? What, you know, is it for his wife? What is it for? And then this is the thing. And I'm a little different. I don't chase price. I don't chase price. So, but if he's interested in looking at things that he didn't know what they would do, sure, I'll absolutely call him. But we know he's not going to get a term policy until he's 99. It's just not going to happen.
No, the term policy, all you're going to get is 10 years. They're not going to go past that 85 range, maybe a few years past.
I'll tell them stay there all day long, but then what happens when you live to 86? Now we're in trouble.
No doubt. Yeah, Tommy set up a meeting with him and Scott. Let Scott go over the benefits of
Bay City, Texas. So we'll do Friday we're doing Friday at June Friday at 11 a.m. with Scott. I'm on Scott's calendar right now.
Yeah. All right, okay. I can jump to him.
Okay, 10-4.
I'll listen. I'll listen, but I'll tell you, I'm just jarhead Marine, and you have to show it to me.
This guy right here is an expert, brother. Yeah, 100%.
I don't like it played.
Come on now. Do I sound like I'm from China? Come on now. I'm not from China. But anyhow, I'm sending you right now, and we'll chit chat on the 13th at 11 a.m. Save my number in your phone. I'm going to text you right now, okay?
So I just, put in my phone.
All right, 10-4, brother. Yes, sir. You drive safe, Mr. Charles. Yes, sir. Bye-bye.
That's my plan.
Yeah, of course. Yep. Just those survey leads I bought. I'm just now starting to hit them today, so looking pretty good. But yeah, so Scott, I'm putting in your calendar now. He has retirement money. And Darren, what were you saying? Sorry about that.
Oh, that's it. I think Scott's right. You're not going to beat the prices he's giving you, but the reality is also that's just a quote he was given. Somebody gave him a super preferred rating, and
that plan is in place right now, Darren. That plan he has right now.
Oh, okay.
That's not a quote. That's an enforced plan he has right now.
He's got a good rating. We're not going to beat that. So we got to quit looking at ratings. What Scott's going to do is going to say, okay, so when that policy ends at 86 years old, what do you have, right? What do you have? Wouldn't it make more sense to put that money into a something that's going to be building forever, right? So anyway, he's going to show the participating whole life. That was a good practice for you guys kind of see. Price shopping, we couldn't beat what he had, but that's all right. Do we have something that can beat what he has? I think
and you don't even want to ask the price how much I pay for these leads. 75 cents. 75 cents. 75 cents.
Well, hey, I'll let you tell us if you want to promote that. Where are you getting this from?
This lead source, I'm not ready to talk about. I mean, if you say, Tommy, you got to talk about it, so you brought it up, I will. You're CEO, of course, not going to disrespect you. But I'd rather keep it to myself for now until I get some. I just now still on the dial here for past 10 minutes. So this was 10 minutes in, and that's what it looks like.
Put up some numbers, and we'll be watching you. Okay.
10-4. Yep.
All right, guys. Hey, thanks for being on this call today. Hope you got something out of it. And in the meantime, stay on the phone, listen to Tommy, and you guys get on there and start dialing yourself. I want to hear a bunch of you guys call. I don't hear you guys on there that as often as I like. And let's get on there and let's hear you guys make some phone calls today, okay? I do want anybody in Oklahoma. I'm going to do something different. I'll put you in a group text, but we're going to try something for my Oklahoma agents just because you're here. We're going to do a kind of a one-day boot camp on mortgage protection. And I think if we like it and it does well, I will take this to other states. But what I'm going to do is I'm going to buy every mortgage protection lead in the state of Oklahoma. We're going to bring all of our agents down to I might even go rent out a Best Western room or something, conference room. But we'll get everybody down here. We'll go through a training. We'll do in-home presentations. And then we will start setting appointments. And then we're going to spend a whole week blitzing the whole state of Oklahoma. And I'm going to send agents out in 2 by 2 by 2, right? Just like the ARC. And then we're going to send them out by twos. And they're going to start writing up that whole week. We're going to see how much we can write. Doing Kansas City Life, one carrier, mortgage protection, and we're going to see what happens with it. So I'm working on that one, and if it goes well, I'm not opposed to saying, hey, who wants to do the next day? Maybe let's do Texas, and then that, and I'll work around traveling around doing that. But let's see, it's going to be something new. I did this one time before at the other IMO, and we seemed like it was fun. The guys enjoyed it, so we're going to try it with Oklahoma. So I'll keep you guys posted on that. Okay. All right.
We're going to make this into a competition.
It's not competition. I don't think we need competition. I think it's all going to be fun and games. But I mean, like, if you're not competed enough to go out there and want to make a sell on every sell, then you can't be pushed anyway. So,
Amen.
No, I think, Daniel, you're going to have one of your mentors on your team, and you and him or her is going to go out, and you're going to take your 20 or 30 leads, and the hustle. It's called a hustle, guys. You're going to take them. You're going to door knock them, and knock on the door. You're going to show them the lead, and you're going to set an appointment. And it's got to be that night or the next day. You're going to set an appointment, and you're going to door knock for a whole day, 20, 30 leads, and go set your appointments up for the next 2 days. And then you're going to run 2 days of appointments. You're going to come back. We're going to do the same thing over again. Give you another 20 or 30. Door knock every one of those leads. Come back and run your appointments the next 2 days. If you guys do that, I don't know why in the world you couldn't make an extra $10,000 that week just doing what I'm showing you. So it's going to be fun. I think it'd be a way that we're going to do mentoring. We'll have a leader with his agent on there, and they get to do a little mentoring with it. So it's going to be fun. So we'll keep you guys posted on how that goes. I'm just trying to get that organized right now. All right, guys.
Scott.
Yeah.
Hey, Scott. So I set that up for you Friday at 11 a.m. I put some good notes in there. I put his date of birth, put what he has to the best of my knowledge. He did say to not call him from a spam phone number. You know, some numbers show up as spam. I take it that you call from your regular cell phone. I mean, you're the best at this. So, yeah. And if you can't get them on the line, just go ahead.
Everything I have is verified. Every number.
All right. I figured that much. Yeah, 100%. I am going to be on Zoom. Whoever wants to sit and dial, do it your way. I don't tell people what to do. I like to have fun on here. I'm not the best agent in the world. I don't know everything, but I like to have fun and conversate. If anyone wants to sit on here and dial with me, love to listen to you and learn from you too as well.
All right. Tommy, you've got it, man. You go ahead and take over the sales training and make these sales. And you guys hop in. If you get somebody on the phone, the way you do it, you unmute yourself and let us hear you selling. Okay. Then who's ever got somebody on the phone, you're unmuted and we're going to listen to you in. See you guys. Have a good day.